Stocks slip after Israel and Iran enter into an armed conflict. Equities are a sea of red with only a few stocks flashing green. Oil producers are key gainers while oil users take a drubbing.
The horrific Air India airplane crash can lead to more stringent checks before delivery of new jets, delaying supplies in the short term, say experts. Any such development can hurt growth for airlines.
Crude prices jumped 10% to a two-month high after Israel strikes Iran. Fears of disruption at the Strait of Hormuz, a vital route for shipping. Oil also goes ahead and inflates worries.
Tata Sons and Air India chairman N. Chandra tells CNBC-TV18 Air India's jet crash yesterday made it the worst day of his professional career, calling it a devastating tragedy. He announced support of 1 crore each to each affected family and promised to rebuild the destroyed medical facilities. A very good afternoon. Welcome to Halftime Report, live from the CNBC-TV18 Motilal Oswal studio. I'm Ekta Batra, and with me is Vivek Iyer. Well, it's turning out to be a session which is extremely weak for the markets today. So we have the Nifty, which is down around 200 odd points. We've been trying to defend that 24,650 odd mark. So let's see whether that sustains or not. The mid-cap index down around 300 odd points, with the Bank Nifty, which is under pressure as well, so down around 1 odd percent. It is a confluence of factors which are really affecting us in today's trading session, and that includes things such as obviously the geopolitical risks which are rising in West Asia at this point in time, the conflict between Iran and Israel and what kind of shape that would probably take in the next couple of days is something which is probably weighing on the markets at this point. We have Brent crude, which has spiked up around 8 to 9 odd percent on account of that. Separately, we do have the sentiment negative with regards to the tragedy which has taken place with the Air India plane crash that took place yesterday, and that I think would be something that would be weighing a little bit on sentiment. But nonetheless, we do have some exclusive details with regards to Interglobe Aviation. The promoter, Interglobe Enterprises, may sell approximately 4% stake via block deals today. So that is additional information which is coming in with regards to all of the block deals which have been dominating sentiment and dominating news in terms of the markets. Right. But this is with regards to 4% stake on the promoters. I think we do have Sudarshan with us to tell us more about this exclusive story. Sudarshan, over to you.
Another block deal might take place in Indigo, and that is likely very soon. And this time, it's not Rakesh Gangwal, but another promoter, that is Interglobe Enterprises, which is led by Rahul Bhatia, likely to sell around 4% stake to raise up to $1 billion. Last time, this was the second time that he would be selling stake in a year. Last time he had sold stake was in June of 2024, when he had sold 2% stake to raise around rupees 3,370 crore, and that time selling price was rupees 4,362 per share, and since then stock has risen more than 20%. Now currently Interglobe Enterprises holds around 35.7% stake in the company, and if this block deal happens, Rahul Bhatia would say Interglobe Enterprises holding will come down to nearly 32%. Apart from this, another promoter, that is Rakesh Gangwal, remember in 2022 he had announced that he would be reducing the stake in the company on a gradual basis, and since then he has sold stake of almost 40,000 crore, and now his holding has fallen below 8%. So we'll have to wait if this block deal happens. We have reached out to company for the query regarding this story, but they have declined to comment on the same.
Thank you so much, Sudarshan, for joining us. So two separate sets of promoters. One promoter publicly stating his intent. The Gangwal family has publicly stated they would be trimming their stake gradually as far as Indigo is concerned. But Sudarshan learns from his sources that the current existing promoter who is running the business too is looking to go ahead and pare their stake. Thank you so much, Sudarshan, for joining us and giving us those exclusive details. We will get you updates as and when we do get responses from all the parties involved. Well, moving on, TCM Shriram goes shopping. It acquired a 100% stake in Hindustan Speciality for 375 crore rupees. This acquisition marks the entry into epoxy and advanced materials business. We are now joined by Amit Agarwal, ED and Group CFO of TCM Shriram. Thank you so much, Mr. Agarwal, for joining us. Along expected lines, 2024, you told us, even at the end of the previous quarter, you did mention that you've earmarked a certain amount for going ahead and expanding your presence in the chemicals business. Give us a sense of the target or the acquired entity. How did you arrive at the valuations? And we do understand the bottom line for the acquired entity has been in a loss for the last couple of years.
Yeah, so see, this is a great asset to buy. It's relatively a new asset. It was set up in 2018. And it's very close to a site, existing chemicals complex in Jagadia, Gujarat, which is about 3.5 kilometers. I think the whole objective was to, give us a jump start into our epoxy and advanced material business. So with that objective, I think this was a great buy. And I think for us, getting into this business as early as possible was key. The reason being, one, that it is a growth business. It's growing at about 11% in India and about 4 to 5% globally. So that is one reason why we very soon wanted to, get into a jumpstart this business. That is one. Second, DCM Shriram is actually trying to up the value chain in its chemicals business. So we are into caustic chlorine. We are the second largest producers in the country. Now from chlorine, we are producing ECH, which is a key raw material for epoxy. And this company that we have acquired has liquid epoxy resin capacity and also is into derivatives, which is, the ultimate value add. So the idea is to be in the ultimate value chain. And that's the reason why we acquired this company.
Okay. The company, though, is loss-making. It's made a loss of around 28 crores in FY25, 30 crores plus in FY24, and in FY23 over 47 odd crores. Can you tell us when is it likely to break even?
Yeah, so we expect it to break even within a year's time, right? See, the reason why it is not doing well, I think we need to understand that. One,
Right.
the higher amount of negative PAT is because it has a very high amount of debt. Now, as part of this 375 crores, majority of debt will get paid off. Almost all term debt will get paid off. That is one big reason, because if you see their EBITDA is only about -8. It has been in the range for last 2 years between negligible to -8 in FY25. So that is one. Second, we are, we have a complete value chain, and this company does not have that. They do not have epichlorohydrin, which is ECH. Now, we will be supplying our ECH to this facility. So that is one integration that will have, which just this company didn't have. Even in terms of efficiencies, I think they've not been doing very great. So idea is that once we take over, we'll bring in our standards of working there, infusing the funds, doing better capacity utilization. Currently, they are at about 60-65% capacity utilization.
Okay, I think...
Mr. Agarwal, we seem to have snapped that connection for a bit. We'll try and get Mr. Agarwal back on the line. Well, one very interesting point that he just made. I think we have Mr. Agarwal back with us. Mr. Agarwal, sorry we lost you for a bit there, but please continue. You were talking about your plans on, number one, you were explaining to us one of the main reasons for the hit on the bottom line was due to the higher finance costs. So we want to understand from you what will be the finance cost saving you will see given the fact that you will acquire this particular entity and your plans to turn it around.
Yeah. So what I was mentioning was that as part of this 375 crores,
right,
we are paying off almost the entire debt. So therefore, it will be negligible interest cost going forward. That is point number one. Second, the company, the HSCL, has issues with respect to backward and forward integration. Given that we have ECH, which is a key raw material, so that issue gets resolved. Even in terms of forward integration, we'll be more active on the derivatives. We will also expand the derivatives business. So I think given these factors, along with efficiencies, along with capacity utilization going up, currently it is about 60-65%, we should inch it up to about 85-90% in a year's time. Given all that, it should break even within a year's time and actually be profitable in a year's time. But I think we're not going to stop at that. I think what is important to understand, the reason why we acquired is to grow this business. Our intention is to, currently it has a capacity of about 17,000 kilotons per annum on liquid epoxy resin. This capacity should be 3x in next 3 years. So we will be about 50,000 plus in next 3 years. And on derivatives, which is another 17,000 kilotons per annum, that will grow by almost 4 to 5x. So that's the plan for next 3 years, and therefore, this will become a very important business, contributing significantly to both top line and bottom line.
Mr. Agrawal, just a quick question with regards to the blended margins then. Can you tell us, you did around 11% in terms of your margins for DCM Shriram. Now that this company gets added and integrated, what would the blended margins be, considering that you are in process of breaking even on the bottom line?
So see, currently it's a relatively small business having a turnover of about 300 crores. So I don't think they will have any significant impact on overall margins for the group. As we said that we expect good numbers in the current financial year for the group as a whole, and therefore I don't see this impacting our margins. But if I tell you the margins specifically for this business, we are targeting that we should be in the range of around 10 to 15% for the epoxy resin business going forward.
Understood that. Mr. Agrawal, due to paucity of time today, we will keep this conversation short, but we hope to get you once again on the channel post Q1, and in case you do make any other major announcements. Well, it's now time for a short break. Up next, we will connect with the management of Oswald Pumps. Remember, the company is coming out with a 1,387 crore rupees IPO, which opened for subscription today.
Welcome back. You're still tuned into Halftime Report on CNBC TV18. Well, the IPO of solar pump manufacturer Oswald Pumps kicks off for subscription today. And it consists of a fresh issue of around 890 crores and an OFS component of around 497 crores. We have with us the company's CMD Vivek Gupta and the CFO Subodh Kumar joining in now to discuss the company and the upcoming IPO. Mr. Gupta as well as Mr. Kumar, thank you very much for joining in. Mr. Gupta, let's start with you. Give us a sense in terms of the revenue growth for the company, which has been extremely good, 45% CAGR in the last 3 years. It's been better than your peers. What is resulting in this, expedited growth that you've seen? What's the nature of products which have been supplied under the PM Kusum scheme? And is it something which is very generic or commoditized?
Yeah. Hi, very good afternoon, Ekta. Yeah, what happened, basically, we are making solar pumps and we are fully backward integrated company. And even in entire turnkey project, which we are supplying to government, in which basically there are 4 components, pump motor controller that we are manufacturing, and the solar module again we are manufacturing, the solar structure and BOS. So the whole item which we are producing in turnkey project, so entire turnkey we are manufacturing. So by that profit we are getting, and even after that we are doing EPC business also. According to all peer competitors, because of this all backward integration, this profit we are getting much higher.
Understood that. So consequently, EBITDA margins too have considerably improved from 10.3 in FY 2022 to 28.2 in the 9 months of FY 25. Is this sustainable? And we also appreciate the fact that you've had a tough time actually getting to us. So thank you so much. Wish you all the best. The other important question that we want to ask you, along with margin sustenance, has been, and a whole host of other managements present in this particular space have told us that receivables from state as well as central government entities have been a bit of a concern. How are you dealing with it?
Definitely, all these margins are definitely sustainable, because if you see our all business model, these profit we are getting in addition to in last year we did EPC business started with EPC business, along with we started solar module business and solar structure as well as BOS. So why our profit margin increased, and definitely in near future we have lots of plan to sustain this business, and all our team are doing lots of value engineering, and we are very much confident about this getting. And even if you see the receivable cycle, basically from last 1 year, we are supplying to direct state governments. And the state government recycle timing is around 140 to 150 days we are getting. But in coming days, it will come down drastically. Because government is thinking in this direction very aggressively. And because this government is promoting this scheme very, very aggressive, and all the industry are very confident the receivable cycle will cut down drastically. As well as slightly receivable cycle this year higher because election period was there. So 10 to 15 days due to code of conduct affect the receivables. Yeah.
Okay. Mr. Kumar, just on the balance sheet, I had a quick question with regards to the debt figures. 9 months FY25, your total borrowing stood at around 346 odd crores. And it's been a spike as compared to FY23 and FY24. Are the proceeds of the IPO going to go into debt reduction? And what is the plan in terms of the total balance sheet? What would it look like?
First, I would like to, I would like to divide this IPO proceed into 3 parts. So, in 890 crore, I divide into 3 parts. Like first part, we are going to spend 369 crore on the capex, and 313 crore we are going to repay our debt, which is working capital debt. It's all CC limits, and rest we are going to use in our the GC part, which is also part of the working capital. So this 390 crore which we are going to spend on capex, there is another 2 parts. 189 crore, it means around 90 crore we are going to spend in our Oswald Pump Limited holding company on their manufacturing plant for automation, modernization, and capacity enhancement. And another the rest 269 crore we are going to spend on our Oswald Solar Structure Private Limited, which is also part of the Oswald, which is only on subsidiary. And this 269 crore we are going to increase our capacity from 600 megawatt to 2.1 gigawatt. And apart from that, we are also going for their backward integrations like EV box, JV box, EVA sheets, aluminum exception, like this. So this is the whole structure. So we are going to spend our 890 crore and infuse in our balance sheet.
Got that. Mr. Kumar, that brings the question. Given the fact that quite a few of your facilities, are currently not running at full utilization levels, what is the need to increase capacity? And secondly, just a quick word on your order book. Order book currently, we understand, is close to 1,100 crore. Order prospect pipeline of a little over 3,200 crore. So at the end of FY26, where do you see order book stand? And a typical win ratio, if you cannot give the exact number.
So if I want to highlight it here that if if you look at our 9-month number, so we already delivered the very good progress in our kind of revenue and EBITDA margin. So and the order, you already said that we have 1,200 crore in hand, and that there is a 300 is in LOI. So accordingly, as per our internal target and our the objectives, so we are looking for the good good achievement.
Okay, all right, Mr. Gupta as well as Mr. Kumar, we're going to leave it on that note. Thank you very much for joining in and giving us all of the details with regards to the IPO, that's Oswald Pumps. We need to take a short break with the news that we have the Nifty, which is down around 175 odd points. So it's been a tad bit of a recovery from the day's low, but nonetheless still a weak day for the markets. We'll take a break, but be back with more. We have Ajit Mishra from Religare Broking who will join in with his technical call. Stay tuned.
Welcome back to Halftime Report. Well, it's a good time to get a quick technical check on the market given the kind of volatility we've seen. Ajit Mishra from Religare Broking joins us on the show. Thank you so much for joining us, Ajit. Well, what do you make of the markets at current levels? It's been a volatile trading session, but a bit of buying emerging from lower levels.
Yeah, good afternoon, Vivek. So yes, you are right. Vivek, last Friday we were celebrating the rate cuts. Markets were upbeat, and today we are seeing almost a reversal. So it seems like that the kind of consolidation that we were seeing earlier, market have re-entered into that phase, and we might continue to witness this kind of consolidation continuing until we see a decisive break above 25,000 levels in the Nifty index. So until then, it's prudent to focus on sector and theme specific approach. So despite the negativity, we are seeing IT pack holdings well, then the healthcare space also showing resilience. So HCL Tech is something that we like from the IT basket, and 1810 is something that one can maintain as a target with stop at 1660. And from the healthcare space, Max Healthcare, the stock is set to make a new record high after almost 2-3 months of consolidation. So here 1340 is something that one can maintain as a target with stop at 1170.
Okay, all right. We're going to leave it on that note, Ajit. Thanks very much for joining in. We'll take a short break. On the other side, Manisha Gupta will join in. She has with her Harshal Barrett of Metals Focus. Stay tuned.
Welcome back, and joining us on the show now is Harshal Barrett from Metal Focus. Harshal, hi. There's so much that's happening in the international markets. Until now, we were looking at tariffs and, of course, the US inflation numbers. But the geopolitics clearly has added much more in sense of prices and impact as well. With where the gold prices are trading right now, just $50 to $60 away from its all-time high in the international markets, while, of course, the Indian markets have hit an all-time high of lakh rupees at 10 grams. What's your sense, first of all, in the kind of scenario, the background that we're working with?
Good afternoon, Manisha. I think geopolitical uncertainty has sort of become a permanent feature of the precious metals market since the Russia-Ukraine war broke out in 2022. And at times when that seemed to be easing, we had economic uncertainties like the trade war coming into the market. So I think the overall backdrop, as far as gold is concerned, still remains very, very positive. Apart from the just renewed geopolitical uncertainties, as we mentioned, U.S. inflation has been now supportive of the argument for rate cuts by the Fed. So all in all, I think we are set to see new highs in gold, and we continue to have a very constructive outlook as far as gold is concerned. We see gold making new highs in the coming months.
3,500 is what gold is eyeing right now. But beyond that, what is the kind of levels that you at Metal Focus are now looking at for this year or even next for that matter?
I think, $3,600 to $4,000 levels is the broad range that we are looking at, once gold decisively breaks above 3,500. So I think 6 months to 1 year down the line, we don't see anything materially changing as far as gold is concerned. We still expect official sector buying, by central banks to continue to remain very, very supportive for prices. The overall move away from the dollar, the de-dollarization theme, I think, will continue to play a role in gold, even when the other uncertainties are not playing out. And I think that aside, even the US macro backdrop, with tariffs set to take effect in the coming months, I think we'll see a slowdown impacting the US economy, which will, augment the case for rate cuts as well. So all in all, I'm looking for a pretty good ride for gold over the next 6 to 12 months.
Oh, well, absolutely. For the Indian markets, though, we've seen a rupee depreciation as well come in today, and that perhaps seems to be supporting prices because the rupee is trading at around 8-week lows as well. Harshal, when it comes to the Indian markets buying, then you mentioned central bank buying has been on the stronger side. ETFs have done well as well. But what about the physical market in India? And that really seems to be suffering, would you say?
It's definitely. I think, not just in India, world over, I think because there's demand for safe haven assets, investment demand is generally, doing okay despite the high prices. But jewelry demand definitely is suffering, not just in India, but in a lot of markets that we cover. In India specifically, as you mentioned, prices now, above the 1 lakh per 10 gram level. I think we are also in a seasonally sort of slow period as far as Indian demand is concerned. So we expect jewelry consumption to stay under pressure, in the coming months as well. And only if the price stabilizes around the festive season, we may see, sort of a material rebound in demand. Otherwise, I think it could be a pretty bad year for jewelry demand.
Any percentage point that you're putting out in sense of jewelry demand decline for India?
I would say double digits.
Okay. Harshal, you said central bank buying is going to be one part of ETF buying is something that we've seen. But when it comes to CFTC data, that still hasn't been very supportive. So where do you see the next major bull run coming in, and who would the participants be?
I think, as you mentioned, CFTC data still shows that tactical longs in gold are still to be built. I think that's more to do with the fact that gold reversed from a psychologically important level of $3,500. At that time, the rally was looking sort of overbought as well. So we saw tactical positioning in gold not grow as much. So this, in fact, offers the potential for the price to rally much further once these tactical positions also come into the market. And as far as ETFs are concerned, last couple of years have been generally bad as far as Western markets are concerned. This year, we've seen Western investor inflows coming back into ETFs. So I think that's another argument that is supporting gold at the moment. So overall, as I said, investment demand part of gold and central bank buying, these two remain very, very supportive for the price. It's only jewelry consumption that remains a headwind.
Absolutely. So while you have told us that the international gold prices could see $3,600 and $4,000 an ounce on the higher side, what would you see that converting into for Indian markets? Lakh done. Are you looking at levels much beyond lakh rupees in the India?
Yes, I think, just extrapolating the dollar price, we could still see another 5,000 to 7,000 rupees run up per 10 gram levels in gold in Indian terms.
Okay. So from lakh to lakh 5,000, lakh 7,000 is what you could see in gold prices now.
My God. All right, Manisha, thanks very much for taking us through that conversation. So absolutely escalating in terms of prices for gold, which is currently at a 1-month high. We need to take a short break, but as we do that, here's a quick update. Unlock a new dimension of business intelligence with CNBC-TV18 Access. Our premium members-only experience on CNBC-TV18.com, from market-moving insights and thought leadership to exclusive access to marquee events, journalist interactions, studio tours, and high-impact learning sessions. This is truly an elevated experience, with members also enjoying curated lifestyle privileges and perks, the power of insight, the privilege of access, exclusivity, experiences, and influence. Yours to claim. Become a member. Log on to cnbctv18.com/access/plans. Welcome back. You're still tuned into Halftime Report this afternoon. Well, just a couple of updates in terms of specific stocks. It is definitely the defense stocks which are really asking for a lot of attention in today's trading session. So we have a couple of stocks such as Mazgon Docks, we have Paras Defense, all of these stocks which are managing to hold up with a good gain. But a couple of other stocks which are now seeing some amount of traction is within the entire healthcare space. So maybe there's some amount of risk off buying which is taking place there. Thyrocare, for example, is up around 3% We have Shilpa Medicare, which is up 3% Narayana, which is gained around 2% in today's trade. So there is some amount of gains which are coming into these specific stocks. Idea Forge continues to forge ahead. So up around 8% for that one. Big volume gainer on in today's trading session. On the downside, Interglobe Aviation. So watch for that. It's extended its losses now. It's down 4.5%. It's a double whammy simply because of what's taken place in the aviation space in India overnight. And separately, crude prices spiking, which is really weighing down in terms of Interglobe's stock price at this point. But let's move on then. As Israel and Iran enter into an armed conflict, we have Prashant joining in to explain the importance of the Strait of Hormuz. Let's go across to him now.
Well, a big 10% plus surge coming through in oil prices after Israel launched unilateral airstrikes targeting Iran's nuclear facilities and military command structures. A bit of contextual information. How did we get here? Now, this latest Israeli strike comes as nuclear diplomacy was already, if I can use the phrase, on life support. The 2-month deadline set by President Trump for a new nuclear deal had just expired. The UN's nuclear watchdog, the IAEA, passed a resolution Thursday accusing Iran of breaching non-proliferation commitments. Iran responded by pledging to accelerate its nuclear program, warning it had, and I quote, no option but to respond, end of quote. A sixth round of talks was scheduled for Sunday in Oman, but by Friday morning, as we all know now, diplomacy had been drowned out by what we saw, which is explosions in Tehran and elsewhere in Iran as well. But beyond, what's happening now is a deeper, bigger, more precarious question. Could the Strait of Hormuz become the next geopolitical flashpoint? And this essentially is the map which shows you exactly that. As you can see, it's marked out in that red circle, why that is so important. It's often described as the world's most important oil artery. The Strait of Hormuz connects the Persian Gulf with the Indian Ocean. It handles 30% of the world's seaborne oil, 20% of global LNG supply, and most of Saudi, Iraqi, Kuwaiti, Qatari oil exports. Interestingly, at its narrowest, as you saw on that map, is just 21 miles wide. So it's like a choke point, geopolitical choke point, but with little or no room for error. Now, for decades, Iran has threatened closing the Strait of Hormuz, but despite fiery rhetoric and a long history of confrontation, the strait has never been closed. Consider these flashpoints. They'll come up on your screen quickly. The 80s, which is the Iran-Iraq tanker war, 90s disputes with UAE over Gulf Islands, 2007-8 speedboat standoffs with US naval forces, 2008 a direct warning that they're going to seal off the Strait of attack, 12, 18, 19. This is the sanctions era. Each time, basically, and there are multiple instances, Iran pulled back from the brink. They threatened, but they pulled back. Why? That's the question. Because shutting down the Strait of Hormuz isn't a strategic masterstroke. It's not leverage. It's economic self-harm. Iran itself depends entirely on seaborne oil exports through the same strait through which it earns precious foreign exchange. It's the last major buyer. China would face massive supply disruptions, risking, of course, that very important economic relationship for Iran. The closure of the strait would also violate international norms and could fracture the fragile Gulf balance. Without Gulf Cooperation Council, which is GCC support, any shutdown would be seen as an act of aggression, possibly, not leverage. Even fellow oil giants, and there are big oil producers in that region, wouldn't support it. Saudi Arabia, for example, while it can divert some of its exports via pipeline, but the vast majority still passes through this strait, the Strait of Hormuz. Kuwait, Qatar, Bahrain, etc. have no alternative routes. And most of this oil essentially is headed for Asia. And of course, in Asia, China is by far the biggest buyer of this oil. And the forex which comes into Iran, it's critical to regional stability and revenues for that country as well. So this is the real flashpoint. This is the reason, the Strait of Hormuz, and once again, as these tensions escalate, will that come into play? Will Tehran, Iran essentially threaten to close it? It's never happened before, and one hopes it does not. But I think that is the reason why markets are on edge watching this very, very closely. Back to you.
Thank you so much, Prashant, for joining us, giving us a sense of what exactly this geopolitical escalation means as far as the entire supply chain is concerned. Well, as we now slip into a short break, here's some good news for our viewers. India's business news leader is now just a click away. Introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles, and financial world updates at your fingertips. Download the CNBC-TV18 app now from the Apple Store or Google Play Store, or just scan the QR code on your screen.
Global markets are on the edge after Israel carried out a massive preemptive strike against the Iranian military and nuclear sites. 200 Israeli Air Force fighter jets attacked more than 100 targets across Iran. Israeli Prime Minister said that General Hossein Salami, head of Iran's Revolutionary Guard, was killed in the attack, and Israeli forces have hit Iran's main enrichment site, the Natanz atomic facility. But why did Israel carry out this operation now? And what is the possibility of a full-blown war in the Middle East? Joining us right now in our studio is Reuven Azar, Israel's ambassador to India. He's speaking to us exclusively. Ambassador, thank you very much for joining us.
Thank you.
Give us a sense. There was a worry about this for a long time now, but why now?
Well, Parikshit, first of all, I'd like to start by presenting our condolences, the condolences of the entire nation of Israel for this terrible act air crash that you had, the plane crash that you had yesterday. Our hearts goes to the families of the deceased, and we wish those who survived a swift recovery. We had to attack now because we had very good intelligence regarding the actions that a clandestine group in Iran took in order to create a nuclear weapon, to basically weaponize the fissile material that they have and put it on a ballistic missile. Israel will not allow Iran to annihilate it. We know that Iran has repeatedly declared that they want to destroy the state of Israel, that they have to remove this cancerous tumor. They have been actually acting on 3 tracks to destroy us. Creating a nuclear weapon, creating a huge arsenal of ballistic missiles. By the way, we know that they were intending to build in the next 3 years 10,000 ballistic missiles, and in 6 years, 20,000 ballistic missiles. Now, we are a country half of Haryana, you know, this size of Mizoram or Meghalaya. And such a barrage of ballistic missiles, with each one carrying 1 ton of TNT, is devastating. In addition to that, they were creating all this ring of fire around us with all these proxies which they were helping with creating their own arsenal of weapons, of missiles, training, financing. So now we had to act to remove the possibility that they would attack us with a nuclear weapon. So we took targeted action, and we are determined to make sure that Iran never acquire the capability to have a nuclear weapon.
Right. While this was a preemptive strike that you say in Israel's defense, there is a big worry of an all-out war in the Middle East. Is that something that Israel is now preparing for, a long, prolonged war with Iran, possibly?
We are prepared for their retaliation. As we speak, there is a barrage of 100 drones on the way to Israel. This may be accompanied, like it did back in April, with a barrage of ballistic missiles. Yes, we knew that Iran would retaliate. We are preparing ourselves to that. But it's completely up to the Iranians to decide whether they want to expand this war, because the Americans have warned them that if the United States is attacked, then the United States would retaliate. And therefore, it's up to them. We have an interest just to neutralize the threat. The Iranians have to understand that once they have caught red-handed, not only by us, by the IAEA, that has declared that they are in non-compliance of the Safeguards Agreement, they have to renounce what they call the right to enrich, because they have cheated the system. They are no longer entitled to enjoy rights as regular nations, because they are manipulating the world, and they are using this capability and threatening to annihilate other countries.
Right. I'd like to ask you about the impact on energy prices. What Iran can actually do is not just retaliate against Israel specifically, but send a message to the entire world by possibly stopping or closing the Strait of Hormuz. And we've already seen oil prices jumping this morning, a 9 to 10% hike in oil prices. What's going to be your response to concerns around what may happen to the Strait of Hormuz and how Iran may react there?
Well, we are very, very highly coordinated with our partners and allies. As you probably know, following the Abraham Accords, we have increased the level of coordination we have with the Central Command of the American military forces, and we are also in contact with other armies of countries in the region. They are all in a state of alert, and I think that the Iranians will do a huge mistake if they decide to attack additional countries in the region.
Right. And in case they close down the Strait of Hormuz, what will be Israel's reaction then, sir?
Well, Israel is, first of all, acting to defend itself. But by doing that, we are not only preventing a terrible Holocaust of our people like the one we had 8 years ago, that we are determined to prevent, but also we are defending the world. Because, look, imagine that Iran would have nuclear weapons. What that would do to all our neighbors that are completely defenseless against that. What that would do to the world. We cannot allow ourselves, as an international community, to have rogue elements equipped with nuclear weapons. So Israel, by defending itself, it's actually doing a major service to the world.
Right. Iran has vowed to retaliate, and they've said that Israel will have to pay for what has happened. We're also reading, and we're getting reports that Iran has spent many years strengthening its nuclear sites, and it will be difficult to penetrate them. Israel has carried out one phase of attacks. Will this operation now continue against Iran? Are we going to see more strikes over the next few days?
We have declared that if Iran retaliates, we will be free to retaliate again. So yes, you could indeed see or could see that this will continue. The Iranians have invested tens of billions of dollars, even more than that, in creating this monstrous genocidal capability. And we have the responsibility to prevent it, to remove it, to neutralize it. And therefore we've been acting the combination of tools, not just military tools, but intelligence tools and capabilities we have developed throughout these years. Because when somebody claims that they want to, or declares that they want to exterminate you, you have to take it seriously. Unfortunately, many countries in the world are repeating the mistakes that were done almost 100 years ago when there was such a fascist regime emerging in Europe. Then they tried to prevent war in any way. And the result was the biggest war in the history of humankind that cost 60 million lives. So we cannot wait for that to happen again. We have responsibility. I think we are not the only ones having that responsibility. And therefore, we're expecting support. We're enjoying very good coordination. We are in sync with our American friends. And I hope that through this joint effort, Iran will understand that it has to renounce this mode of action.
Right. President Trump said he did not want Israel to target Iran as U.S. negotiations on a nuclear deal continue. Was U.S. on board before Israel launched this attack? And in case there is a full-blown war, what is the kind of support that you expect from the global community, including India?
Yes, we were coordinated. President Trump and other players were updated regarding what we're going to do. They understand very well that Iran was actually manipulating and using the time, stalling for time, working for time. And in the meantime, developing on a fast track a weaponization program. And that's why we had to take action.
Was India also on board?
India has released a statement this morning. India is concerned from the escalation. We are briefing our Indian friends. We are engaging in conversations at the highest levels. I think Israel and India have common challenges, and we have been cooperating in create the capabilities that each of us needs in order to deal with the threats. We are not involved in the conflicts of India, and India is not involved in the conflict in the Middle East. And that's okay. We will continue to foment this relationship. I think it serves both countries. And of course, we are going to engage with all our friends, including India, in trying to see how we can create a better diplomatic envelope to try to bring peace to the region and to the world.
Right. How do you think the Israel-India partnership is going to be impacted, the economic partnership which had been growing, and very recently the defense partnership? Many Israeli companies have been collaborating with Indian manufacturers to set up co-development, co-production capabilities, especially in the drone sector. Do you expect that collaboration to face a setback because of this, this conflict with Iran?
No.
So the collaboration continues, the partnership continues?
Yes.
Right.
Well, that is our colleague Parikshit in conversation with Ruben Azhar, the Israeli ambassador to India, an exclusive conversation there where they stated their clear stance that they will retaliate in case Iran decides to escalate this particular conflict. Well, with that sobering news and also with the news that the markets once again have dipped, we come to an end of this edition of HTR or Halftime Report. Stay tuned. More market-related action on the other side.